Happy Friday out there, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Friday, December 8th, 2023. As always, we'll start with our executive summary from today's leadoff morning note. If you'd like the analysis supporting these conclusions, as well as what to specifically do about them in your portfolio, you need to be a client of 42 Macro. So we'll start with number one. The November jobs report supported both the soft and no landing scenarios. Number two, the rise in the labor force participation rate to 62.8%, which was the highest since February 2020, drove the unemployment rate down to 3.7%, which is the lowest we've seen since July. And that supported the soft landing scenario. Conversely, private sector average hourly earnings growth accelerated to an above trend pace of 4.1% on a 3-month annualized basis, which was the highest since July of 2023. That supported the no landing scenario. Recall that we need to see wage growth somewhere in the area code of 3 to 3.5%, assuming kind of the longer run average of 1.6 to 1.7% productivity growth to be consistent with 2% inflation. And then lastly, number three, Bloomberg and the BLS are still having some difficulty populating the data from the jobs report. So we are working with a limited subset of indicators at the current moment. We'll update the analysis in the website and the 42 macro dashboard as soon as the data will become available. Transitioning to our 42 macro dashboard, we'll start with our signals from our friends over at Longbow. Nothing overbought, oversold from the perspective of macro market indicators. So we'll just leave you today with some ranges for a tightening S&P range here. We got 45, 50, 40, 45, 49 on the downside, 46, 16 on the upside. So that range has gotten quite narrow in the last couple of weeks in terms of the consolidation that we are seeing in asset markets. And then we got a question here, wrapping it up with a question from our 42 macro aware community, just asking sort of a question about the dichotomy between the bottom-up macro regime projection for deflation, which is a scenario where both growth and inflation are trending lower simultaneously, versus the current top-down market regime pricing in of Goldilocks. We are in a Goldilocks top-down market regime. So one thing I would say is just be aware that the bottom-up macro regime projections are sort of eye candy at best. We don't really use those forecasts or those projections to inform our investment allocation. Our investment allocations are informed primarily through the lens of our quantitative risk management tools, vis-a-vis our weather model, our global macro risk matrix, which we believe help both domestic discretionary and systematic investors orient themselves with what the market wants to price in, as opposed to what your forecast should tell the market to price in. I think a lot of folks are out there losing a lot of money, or at the bare minimum, not making a lot of money out there, consistently relying on forecasts, because at the end of the day, it's not about getting GDP right or the jobs report right. It's about getting the stock market right, the bond market right, the currency market right, the crypto market right, et cetera, et cetera. And so at the end of the day, we built some very sophisticated, very quantitative, and most importantly, very accurate tools that help us stay on the right side of market risk, irrespective of what happens in the economy. Obviously, what happens in the economy is important in terms of anticipating how those tools, how those quantitative signals might evolve. But at the end of the day, what we found and what we've been demonstrating for almost 3 years now is that you don't have to predict the predictors. If you build good systems and build good process, you can just allow those systems and processes to work, as opposed to living in constant fear of getting your forecast wrong, which is what I think a lot of investors are doing out there, because they are in fact getting those forecasts wrong and or not making any money as a result of them. So we'll wrap it up there. Darius Dale presenting our macro minute for Friday, December 8th, 2023. Best of luck out there today. Everyone have a great weekend. We'll catch you back here on Monday. And for those of you who are clients of 42 Macro, we will see you this afternoon for our monthly macro scouting report. It should be a jam-packed presentation. Excited to deliver that into your inboxes. So cheers.